Hey everybody, it's Ken McElroy here. I'm with Lesley Brice, our partner in MC Companies, and she is behind the scenes, runs all the ops, all the operations. She has about 250 employees, I think.
That's right.
Something like that. Yep. So she's got her hands full here. And so I appreciate you being on the show. This is all about property management today.
Yeah, my pleasure.
Yeah, so we have about almost 10,000 apartments, multiple asset managers that manage multiple on-site managers and on-site maintenance crew, et cetera, et cetera, et cetera. Lesley's in charge of all that. And so she's been in the property management business for a long time. Why don't you just do a little bit about your background?
Oh, sure. So I started in property management about 30 years ago. I just started working on site and turned around, and here I am 30 years later, just kind of worked my way up through the ranks, through every position there is on site.
Yep.
Yeah, it's been an amazing
And honestly, there's it's easy to buy a property. It's not so easy to make it perform, which is really why this is so important, because property management is the most important thing. In fact, a lot of people don't know this, but before I met Robert Kiyosaki, I read Rich Dad Poor Dad, because I knew I was going to meet him the next day. And my buddy's like, yeah, I want to, this guy's got some cash, and he just wrote this book. So I read the book, Rich Dad Poor Dad. And in the book, he says the most important person on your team is the property manager. And I actually found that to be interesting because I've never seen anybody say that before.
No, it took me many years to realize what we knew in property management is it's so nuanced. There's no 2 days the same, and that the knowledge that we get over the years can't be replaced. You can't just jump in and manage a property.
I know. Anyway, I appreciate everything you do here very much. You have no idea.
Thanks,
so
Ken.
You basically produces the returns for our investors. So there's really something to be said for that. So there's a lot of moving parts. So let's talk, because I get lots of questions about this. Do I manage the property myself? Do I hire a third party? How does it work? What do I ask? All those kinds of things. So let's break them into two segments. The first one is, just about property management. So what should a good property management company be offering somebody as a client?
So I think the most important thing that they can offer is a high degree of communication and fiduciary duty to you. Meaning taking good care of your money and always having that at the forefront. And it's the most important thing you can do.
It is cash.
Yeah.
Because people buy things. So what happens, my experience has been a lot of times people hire the property manager at the end. Like, they've done a transaction and then they call. I mean, we've had this happen.
Many times.
They call us up like, hey, we just bought a property. We need a manager. It's you're like, really? Like, you didn't have them involved in the due diligence, or you don't know if what the broker is telling you is correct and all that stuff. And so I think that the other thing that came to mind when you were saying that is not only the cash, but a lot of times there's property management companies. Their brand, in my opinion, is not as important as the individual. Mm-hmm. So in other words, you might go somewhere where it has a big, long 30-year track record, 10-year track record, which is not bad because then you have systems and all that. But sometimes what happens is you might get stuck with somebody who's just burnt out on the business, or maybe they're new. Maybe they have too much business,
right?
Because sometimes guys that own companies like ourselves, they're trying to load up the property managers and there's not enough time. Right. So how do you navigate that?
Well, it's true, because property management doesn't earn you a lot in terms of fees. So a lot of these management companies work with really thin teams. They don't have enough staff. So one of the most important things you need to know is who's on their team.
Yes.
And making sure that they're properly staffed to be able to oversee your property. You want them to have a large enough portfolio that you get some good economies of scale, but not so many that they lose sight of your particular property.
I like to have regular meetings. So because it kind of holds the property manager accountable. And having been a property manager myself for years and years and years, what happens is if you're saying, hey, I want to have a meeting at my property, trust me, there's a lot of work that goes in the prep for that meeting, right?
Well, yeah, you want to believe that they're always managing the property the same way, but the reality is you being there helps them to remain in check. You have to have boots on the ground to be able to see for yourself what's happening with your property.
So you can mitigate a lot of issues just by having regular meetings. It could be twice a month, once a week, whatever you want. And it could be very short, half hour. That, it could be half a day. It could be whatever you want. But you do have to weigh in regularly. You can't just buy something, turn it over to a property manager, and then be across
wait
the
for
country.
The checks.
Yeah, wait for the checks. It just won't happen. There has to be a level of management of them, right?
I totally agree. I think that when, even us, we've been prone to hire third-party management companies. It's really important to have a good relationship with your management company and having the ability to be part of the decisions, meaning who's managing the property. You want to know and build a relationship with those folks so that you have a bond and a lot of communication with them. It has to be real transparent communication, though.
It does. And if you are kind of, you have across the country and you can't be there regularly and you can't communicate with the property management firm regularly, I think one of the things is just having some kind of a weekly report, something, anything. And, we do that. We have weekly reports. Each property we have gives information to our company, MC Companies, and says, this is where we are. This is where our occupancy is. This is where our vacancy is. This is how many of the units are ready or not ready. This is how many delinquents we have, any issues. And so what happens is it makes everyone accountable. The property manager becomes accountable to the client. And just that little thing kind of keeps things in check.
Well, it does, because if you're just measuring the physical occupancy or the amount of cash flow that you're getting, you don't get to really see where the opportunities lie. I mean, there's always another area you could dive into. Like you were saying about maintenance, it's really important to have units ready. And if you're not measuring, are they ready to move into, you're probably not going to lease those units. And checking in on the customer satisfaction,
just
all
like,
of those things.
If you're checking into a hotel and you walked into a dirty room, would you want to rent it? It's the same thing with apartments.
Huge.
You should not show dirty apartments, but people do. And then they're, it's hard to command high rent when you're showing units where somebody just moved out. They need to be perfect.
Absolutely.
Each and every time. I really appreciate you guys listening to my show. And to learn more, I have an entire website dedicated to real estate education at kenmcelroy.com. And the price is just $14.99 a month. And you'll have access to hundreds of videos in the video library. So please visit kenmcelroy.com if you're interested in more education. Second question, what are the key questions you should ask a property management company before hiring them?
Well, I think there are so many things that you'll want to know that can be revealed in the property management agreement. You'll want to get your hands on that and read it cover to cover.
Good point.
There's a lot of hidden things in there.
Okay, so let's talk about that. Okay, so when you call up somebody and say, hey, I'm interested, most people focus on the fees, right? They're like, it's funny when people try to negotiate fees because the margins are super thin for property management. They're horrible, actually. It's like battle pay. But getting the management agreement kind of flushes everything, right?
Oh, it does. There are so many ways for them to double or triple dip. When you're looking at your management agreement, you want to really be watching not just the fee. There's a standard for that depending on the size of the property. It could range on a single family property 10 to 12% of the revenue. But there are other fees built into a lot of these management agreements that you want to know about.
That's a good point.
Like late fees, some management companies
keep them.
Actually keep them, and then they charge you for the benefit of evicting that resident. So that's a double dip. Then a triple dip is some of the maintenance areas that they're charging for. They may negotiate a good price with a vendor and keep the margin between that and what the market is.
Yeah, so
unbelievable.
So for example, they might have a maintenance guy in-house that's making $25 an hour, but they're charging you $75.
Exactly.
That happens all the time. So those are the kinds of things that will be in the management agreement. What we ought to do is we ought to do a whole video on the management agreement.
Sure.
All the fees, all the things inside of that. We'll do a specific video on that later. That's a really, really good idea. Okay, third, what are the certain rule of thumb on the percentage that they should be charging? Because this is, what's easy, people focus on them, how much are you charging, right?
Right.
Happens all the time.
Well, and I think this will always depend on the size of the property. If you've got a single family property, it's usually 10 to 12%, but that'll be determined based on the rent.
Right.
They're looking for a specific dollar amount. And so what they need to be able to do is measure if they're going to be able to cash flow by doing the account. So if you've got multiple properties with 100 units or 50 units plus, it could be anywhere from 3 to 4% of the total revenue. But again, that'll depend on the rent levels.
Right. And here's what I like to tell people like around this, because I go, okay, how much is you want to find a property manager for your house. How much is your house rent for? They go $1,500. I go, okay. So 10% of $1,500 is what? $150. Okay. Do you think the property manager makes money at $150 a month?
No way.
Right. Because you have, the phone calls, the vendors, the communication with the tenants, the accounting, the paying the bills, all the kinds of things that happen. It's very, very hard when people think the property management business is profitable. It's super difficult to stay profitable.
Agree.
And when you now, however, if that property management company has 500 houses, then there is some economies of scale. But if they have 20, I can tell you 20 at $150 is not very much money, and it's going to be super hard for them to manage.
Well, and they may even try to do that, but the issue will be is they won't be properly staffed to oversee your property.
Right.
Something's got to give.
Something's got to give, exactly right. So just be super cognizant as you're starting to beat up the property manager on fees. Don't get me wrong. You have to question them, and you have to get into what's included in all that stuff. But just know from their side of the ledger, because we are in this business, we have a accounting staff here of 12 people, right? And they're all highly paid people. They're basically CPAs and bookkeepers, and have people with finance degrees, et cetera. And it's a big number. We probably have $100,000, each month in just accounting fees. Right?
Just payroll.
Pretty close, just in payroll. So, there's kind of an ebb and flow, and they're all busy.
It's really important to realize that you want to pay your manager really well. You want to pay your management company well. You'll get more attention that way. If you try to squeeze them down by way of percentage or dollar, you don't get more for that. You end up suffering in service somehow.
So the fourth one is, should you be able to cancel the contract at any time, the property management agreement?
Typical agreements are a year long. Typically you don't see it any longer than that, but they all normally have a 30-day out clause.
Yeah, and I've seen sometimes these are regulated by the landlord-tenant law.
Sure.
Right? And we haven't really talked about landlord-tenant law, but we are bound by it. So we have properties in Oklahoma, in Texas, Arizona, Nevada, Oregon, Washington. We've had them in all those spots, and each of those areas have different landlord-tenant laws, and you have to know what they are, right?
Yeah, absolutely. And it does change from state to state. There's also broker requirements. So real estate law also kicks in related to your property management agreement.
Yeah, so 30-day notice might be an Arizona law, but it might be something different somewhere else. And so it's really important to understand, and these are online. The landlord-tenant laws are online, super easy. The fifth one, the last one is, can you hire a management company before you actually buy the property, and what is the cost for that? Now, this is, I think, what most people, they miss. This is the biggest hidden thing that they should be doing.
Well, not only should you really have to. If you're buying a property, the minute you get your offer out, you put a letter of intent out, you should have a management company already identified. And help them get to the property so that they can help prove your underwriting.
Well, let me ask you a question, Lesley. In all your years, when is the first time, has there ever been a time where you've actually seen a broker package or something from a seller that's been accurate?
No.
Ever, right?
No.
Ever.
No,
So,
they have to paint. Their job is to paint blue sky.
Right,
Our
So,
job is to make sure we proof it.
That's right. So if you think that you're getting accurate information from a seller or from a broker, I'm here to tell you it's just not true. Now, I'm not saying they're trying to be deceptive, but they're trying to sell it to you for what the future brings. Right?
Exactly.
And sometimes we found a lot of this where they'll have vacancies that are shown as occupied. They actually have written leases to themselves to make the occupancy look better. There's been a number of things that sometimes they don't report all the expenses so that it shows that the expenses are lower. And these are all ways to have the net operating income or the net income be higher than it really is. And these are things that property managers see really quickly.
Well, and they do. And I think the other thing is if they operate in a specific area, they're going to know it better than you will.
Well, that's for sure. They're going to know everything.
Rents, they'll be more familiar with what kind of lift you can get.
I
and
know.
Listening to them is really important.
You remember we bought a management company in Dallas years ago, like 10 years ago, 9,000 units. And, what we did is we stepped into all their knowledge. Their knowledge of submarkets like Addison, and South Lake, and areas in Plano and Frisco and Carrollton and things like that in the greater Dallas area, which are very, very different. And there's some sides of the street that are good and some sides of the street that are bad. There are properties that are performing and not performing, and all that stuff happens at the ground level. And for somebody who's just coming into a market for the first time, if you're not utilizing a property manager to tell you what's the truth, because if you're going to hire them and they have to perform, they're going to tell you the truth.
Oh, no kidding. And the regulatory requirements. And one thing we didn't know was what the cities were going to require by way of inspections.
Right.
If you've got a good management company, they're already going to know all of that.
That's right.
You just don't know what you don't know.
Yeah.
That's the
I
scary
remember,
part.
like when we went into Texas, it's like they have all these state inspections, right?
Oh, it's crazy.
City inspections. And so, again, it costs to do it. But then also there's penalties for not doing it. And these people, they know each other.
They
right?
have relationships.
Yeah, they have relationships.
Yep.
And so you step into all these kinds of things that if you're trying to, do self-management, which we're going to talk about next, is super difficult, and a lot of people do it to save money on fees. And so that's why I think that, engaging a management company and I've seen actually management companies for the deal itself do all this work for free.
Agree. They'll likely charge you if they're not going to get the management account, but oftentimes these are absolutely free, and it helps you to be able to realize whether your underwriting's right. If you're not facing,
well, that's the thing,
whether it's right or wrong at that stage, you might be in for some trouble.
Trust me, yeah. The very basic thing you should do is have the property manager take a look at the rents, the vacancies, the other income, the expenses, specifically insurance, taxes, marketing, payroll, those kinds of things. And they can tell you, because if they're managing a bunch of properties, they can draw off of the experience from looking at all those other properties, right?
Amen. Yep.
So nice job.
Yeah, thank you.
Good job. Thanks.
Fun stuff.